Ladies and gentlemen, warm welcome. It's Richard Clippen here. Welcome to FSC Connect for 30th of June. Delighted to welcome the following speakers to our panel today. We have Susan Taylor, who's the CEO of FSCL, Financial Service Complaints Limited. Angus Jones, who we all know and love, is the chair of the Code. Gillian Boyes from the FMA and specialist in investor capability. And of course, Matt Banham, who is the head of claims at Signal OnePath. And as I said a little earlier, the conversation today is all around complaints, consumers, COVID, claims and codes. And what we're going to try and do is weave a conversation together that picks up a bunch of that flavour and allows us to explore a range of things. As we normally do with a number of our sessions, is we ask and invite each of the speakers to kind of give us a 2-minute overview of their view of the world. It's been a pretty crazy front end of the year as we head into the second half of the year from tomorrow. And it'd be really interesting to get everyone's perspective, and then we'll jump into some of the conversation. So delighted, Susan, to perhaps hand the baton first to you. And get your take on how the world's been for you in your role and your constituency over the last few months.
Great, thanks Richard, and kia ora koutou. Good afternoon everybody. Well, we've been very busy actually since the start of this year. We had a high volume of complaints under investigation leading into COVID and lockdown, and that has just continued during the lockdown period. In fact, it's the end of our reporting year today, and I was just looking at some figures this morning, and it looks like we're up about 40% on new cases that we formally investigate. So that's a huge increase. And as you can imagine, that's been putting quite a strain on resources here, and our staff have certainly been under the pump. Just in terms of the types of complaints, certainly since COVID, probably travel insurance complaints make up about 1/3 of the cases we investigate. So as you can expect, people who have been were overseas and caught out by COVID, or have had to cancel their trips because of COVID, have lodged travel insurance claims that have been declined, and they then complain about the declining of the claim. We've also had quite a number of financial hardship related complaints. We expect that so far we may only have seen the tip of the iceberg in those, and that once the various government relief packages and lenders relief packages finish, we'll start to see potentially quite a large influx of financial hardship complaints in a month or so's time. And for our staff going into lockdown, that was quite challenging for them, because working remotely, they were taking quite calls from very stressed and distressed consumers, very worried about how they were going to make their next loan payment, or perhaps worrying that they thought they had insurance cover for a particular situation, but it transpired they didn't have any insurance that would cover a pandemic such as COVID. We've had complaints against fund managers as well, with people that have certainly panicked in the early stages of COVID when they saw markets crashing and wanted to switch their funds from growth funds to conservative funds, and there were delays perhaps in processing those switch requests, which saw their fund value go down further. We're expecting to see KiwiSaver withdrawal complaints as time goes on, where people are seeking to make KiwiSaver withdrawals and either the application's declined or they don't receive as much money as they think they ought to. And we've seen a handful of complaints about advisors. I have to say the numbers, fortunately, have been relatively low, and by and large, so far, it's been where an advisor thought that they had cover for, the client thought that they had cover for a particular situation. So perhaps business interruption insurance that would cover COVID and it hasn't, or in the case of a consumer, they thought that they had cover for redundancy, but they didn't have that in their insurance package. So that type of complaint, but as I've said, relatively low numbers. I think just in the current times, consumers' access to alternative dispute resolution, to a free complaints service is really important at a time when people are facing a lot of financial stress and other upheaval in their lives. And it's very important that we make sure that our services are well known to consumers and that we make it easy for consumers to access our service. So that's it in a nutshell for now, Richard.
That's great. Thanks, Susan. We're going to come back to explore some of the things you touched on, because I think that question around hardship and stress and well-being, which has kind of played through a number of our conversations, obviously finds its way into your organisation, obviously in a significant uptick. So we will come back to that. Angus, tell us a bit about your world over the last few months.
Thank you, Richard, and hello, everybody. Well, the code is part of a multi-piece regime, lots of different pieces of the jigsaw puzzle that sit together. And COVID has affected several parts of that regime, but I'm in the fortunate position now to be able to say that is all now settling into place. So we now know the new start of the regime is the 15th of March next year, which is great. And we've also got two documents that we were waiting on that sort of build the whole picture together. So the FMA's draft, or the consultative draft on their full license conditions, and also the publication last week of MBIE's regulations for disclosure. And those are important to the regime because no one part of the regime operates in isolation. And we were very aware of that when we developed the code. We wanted to make sure that we didn't put into the code things that were, better placed elsewhere in the regime. And a very good example of a topic where that was really important was complaints. In early versions of the code, we did indeed carry over that concept of a complaint from the old code, or complaints handling. And then we realized, actually, the code is about the conduct of the advisor. And when it comes to what the business is doing, the financial advice provider, the obligations around things like complaints should actually sit in license conditions. So if you look at the subject of complaints, it's actually dealt with in 4 different areas. So first of all, it's dealt with in the license conditions as a requirement for the FAP to be doing certain things around complaints. Secondly, it's dealt with in the disclosure regs, because the disclosure regs say things that you need to tell your client about your complaint system and external disputes resolution. Then thirdly, the financial service providers legislation specifically requires when dealing with retail clients for you to have, or financial services providers to have an external dispute resolution scheme. And then sort of fourthly and lastly, if you like, the code comes in from a conduct and attitudinal point of view to wrap that all around. And I think that 2 areas in the code that try and tie that all together is where we talk about in standard 1 about treating your client fairly. We enumerate, if you like, some examples. And one of those examples is listening to clients and considering their views and responding to their concerns and preferences. And we see that in an attitudinal sense, setting the theme that should drive the way complaints are dealt with. But then also in the following standard, standard 2, we talk about where you have, which requires you to act with integrity. We specifically list, that includes in how you interact with clients, prospective clients, colleagues, regulators, media, and the public. So it goes to that whole way of interacting with others. So I suppose perhaps in some ways, you've got to read this regime as the composite of all those different parts to get the right answer. And now at last, following COVID or following lockdown, we're in a position to see all of those parts and how they might hang together. Thanks, Richard.
Thanks, Angus. And yeah, we will touch back on some of those topics. Folks out there in webinar land, as a previous speaker spoke about, this is interactive. There is a Q&A button. There is a chat button at the bottom of your Zoom bar. So if you do have questions, then please feel free to ask we'll be guided by what the audience wants to talk about. Without further ado, Gillian, tell us a bit about your world over the last few months, in particular around the investor capability area.
Yeah, so look, I know a lot of you have heard from a lot of my colleagues. We were pretty quick off the mark to send out a letter of expectation early on in the piece, which went via the FSC and some of the other industry bodies, just reminding people about our expectations in terms of conduct around complaints and, you know, treating people fairly, managing them genuinely, making sure your processes are fit for purpose. And we followed that up with our vulnerability information sheet. Like Susan, we've been particularly concerned with the growing financial vulnerability. We've seen many of the surveys coming out from FSC and from CFFC and some of our own research, in fact, which point to the low financial resilience of consumers at the moment. And when people don't have much financial resilience, they find everything much harder to do, including complaining. So that's been top of mind for us. In the investor capability camp, we've been connecting with other government agencies. Fairly early on in the piece, we set up regular weekly meetings with our colleagues across the financial consumer protection area. So that includes MB, ComCom, CFFC. And we had regular chats to make sure we were across all the issues and what we were saying, and making sure the messages from government were being consistent across you know, industry and for consumers as well. We've also done some work with the Council of Financial Regulators and also internationally, just to find out what other regulators around the world are doing in this space. So the picture we're building up, you know, no surprise, we know that there is increased vulnerability in the community. We know that will continue to grow as some of those provisions that government has put in place come off. We know that industry has really stepped up and done a really great job in many cases, not just handling complaints, but also being very proactive and trying to reach out to some consumers who might not complain. And that's the kind of direction that we'd like to see continuing, and we think that will continue to be a need as we go on. You know, we know that many people don't complain. If they're upset with service, they'll just leave and go somewhere else. So, you know, it's really, really important for industry to think about how can we not just handle the complaints really well, but actually try and reach out to people who aren't complaining and make sure that we're learning from the complaints we have, identifying root causes, picking out those more systemic issues, and how can we then connect with those people who might not actually bother talking to us and actually stop some of the harm happening before they walk out the door. So those are the sorts of things we've been considering over the last few months.
And Gillian, there seems to be if you take a lot of the survey work that's been rolled out over the last month or couple of months, there seems to be a very common theme rolling through, isn't there, around the resilience that's out in the New Zealand community?
Yeah, I mean, New Zealanders had pretty low financial resilience anyway in OECD terms, so we rated pretty low. Lots of reasons for that, but this has not helped. It's really highlighted that people haven't had emergency savings. We know from colleagues in the budget advisory world that when people start defaulting on loans, that's not the first sign of a problem. That's probably the last sign, because the default on loans is probably following, you know, they haven't eaten properly for a while, or they haven't been able to pay the rent because they're trying to manage through these systems. So when you've got people in that situation, they're not really going to speak up against some poor service or a poor outcome. They desperately need the money, and they're not in a stage where they can actually have those sort of conversations. So really important for them to be getting the help from their providers and from you know, any advisors and budget advisors as well.
Great, thanks, Gillian. Again, we'll come back and explore that a bit further. Matt Banham, welcome. Sadly, we don't have you on camera, but we do, I believe, have you on voice. So tell us a bit about your last few months in COVID, particularly in relation to your role as head of claims for Cigna OnePass.
Just to clarify that, Richard, my role is actually head of underwriting, but I do get involved in the claims team as well. So yeah, for the last few months, we've been basically responding in an agile way to the COVID situation. There's been a lot of things to consider. First of all, if you think back to sort of February, March, when the pandemic was unfolding, there was just a real sense of unknown of how this thing would play out. So would the pandemic spread rapidly throughout the country? Would we have community transmission? Would the hospitals be overloaded? And so there was a lot of sort of thought given to how we would prepare for that sort of situation. Luckily, New Zealand seems to have dodged that particular bullet, at least for now. And so the question then went on to, okay, so how would we manage the potential sort of financial implications of sort of unemployment, people who, for example, could work in an industry that's been affected by COVID. Maybe they're in travel, maybe they're in tourism and unable to work. So how would we cope from that, both from a claims perspective and people also not being able to afford their premiums? When we went into lockdown, it then threw up the whole situation of, okay, so how are we going to work? So the working from home situation, how can we manage claims remotely? Can we do it in the same way? Can we get the medical information that we need from the doctors if the doctors are unable to see their patients? So there was a number of different things that we had to consider there. So really it's been constant sort of preparation and planning for what we think might happen. As the situation evolves, what we think might happen has evolved as well. And we still don't really know how this is going to play out in the long term, but we are learning more each day. So it is a evolving and complicated situation, and it's been a heck of a ride, but yeah, we're still working our way through it.
Thanks, Matt. And Matt, just maybe paint the picture in terms of how your team kind of managed the underwriting, and if you can make any comments on the claims side over the last number of months, as you say, it was increasingly difficult to get access to medical services, certainly legal services. So that kind of whole mechanism around hardship and auditing and medical knowledge and so on became increasingly difficult to access. How did you folks cope with that?
So, well, to start with, we thought that what we'd need to manage would be the threat of a worst case scenario, which was that widespread community transmission in New Zealand. The lockdown did, and the closure of the borders, I think, has effectively shielded us from that, and it's not going to be a factor here. In terms of the medical situation, medical practices weren't able to see their patients at the time. So things like blood tests we were unable to obtain. Medical exams with GPs we were unable to get those. And so what it did was it did restrict the information we were able to get to make a risk assessment or to manage a claim. So there's a lot more sort of phone-based contact. From the underwriting side, we may have had to sort of reduce the sums assured that customers were applying for to come in under mandatory sort of thresholds. So it was a sort of a case of adapting to the situation. Since we put our guidelines in place, our reinsurers have moved globally, and they've put some guidance in place as well. New Zealand's kind of once again moved a bit faster than a lot of other places around the world, and so with global reinsurers, with their outlook, it doesn't necessarily correspond to what we have in New Zealand. So we have another challenge, which is getting our reinsurers to understand that what's going on in New Zealand is different from within the rest of the world. So again, that is a ongoing discussion that we have with them.
Thanks, Matt. And you're right. I know certainly through the COVID process, there were times talking to the life insurance community that people were preparing for the worst case scenario, and the sort of horrendous data and numbers and death tolls and hospitalizations that were happening elsewhere in the world was a worst case scenario planning here. And of course, the way it's turning out, although this is a long way from finished, it's very different to that. And so it's, it's certainly the conversation within the FSC life insurance community has been, that's not yet happening, but how do we get back to basics, back to normal in many ways? And that's obviously been a challenge for people as as we went through the various stages of lockdown. Matt, we might come back to some of those topics, but perhaps Susan, if I go just to you on the claims, the hardship claims, and perhaps if we can collectively talk about this discussion around, has hardship always been there, or is hardship kind of been magnified by COVID? And has it triggered, as you said, your 40% increase? Can you see a direct correlation between the stress in the system and the hardship claims, and then the claims coming to FSCL?
Richard, hardship, we always have complaints that involve financial hardship, particularly with lenders, people that can no longer afford to pay their loans, perhaps because of a life event, such as obviously losing job or losing a partner or falling ill. We certainly saw an uptick in financial hardship related complaints in the first 2 to 3 weeks of lockdown, but I think that was people that were, as Gillian touched on, have no savings and were wondering where they were going to get the money from to pay their next loan payment or their next insurance premium, perhaps before the government relief packages fully kicked in. Those complaints have subsided over the past few weeks, but as I've said, we do expect to see a second wave once the various relief packages end. By and large, the 40% increase is really right across the board of all types of financial services that we investigate. So insurance, lending, financial advisors and insurance brokers, trustee companies, card companies. I couldn't say at this stage that financial hardship per se is a particularly dominant theme. It's just an overall increase, which I suspect is probably just consumers becoming more aware of their right to complain and making their voice heard.
And this notion of when the benefits come off and seeing a spike again, it's kind of that's a pretty interesting topic, isn't it? Because if you just look on some of the high streets, if you're in Auckland, if you head down to Commercial Bay or look at some of the cafes, it feels like there's this sense of returning to normal, people going out, people are spending weekends and so on. Mm. Do you think there's an emerging kind of a two-speed economy in many ways, those that are doing it okay and those that are doing it really tough?
I think it's hard to say yet, but my personal feeling and observations from what we've seen coming in the door is that we are perhaps living in a slight false reality at the moment, and that the wage subsidies are perhaps keeping some businesses propped up that would otherwise have failed by now. And I expect that we will see, if not small business failures, we'll see staff, I think, starting to perhaps think about reducing staff numbers, restructures, once those wage subsidies run out. Just from our own experience, we recently had to advertise for a new staff member, and we received about 3 times the number of applications we normally would, and quite a few of those people were people that had recently lost their jobs since lockdown ended.
Yeah. Gillian, what are you seeing out of the data? FMA came out with some investor data last week, but obviously FMA is in field often. What are some of the themes and trends coming out of the marketplace as you're seeing them?
Yeah, so I think we were a little bit surprised that investor confidence hadn't fallen more, but some of the way these surveys are falling, our one fell out just outside, so basically fell into some new recovery period. So maybe there was a little bit more optimism than some of the previous surveys had shown. We've got some further results within that survey that we're still interpreting, but we asked people around their KiwiSaver behaviour, for instance, whether the market crashes caused them to change funds. And yeah, interestingly, people were still changing funds beforehand. There didn't seem to be more in terms of overall, in terms of overall behaviour. But yeah, as I say, we're still interpreting that result because that seems a little bit unusual compared to what we've heard and seen through what industry have been telling us. I think people, one of the things that we've seen is people have been more engaged in money. So you know, it has been a bit of a crash course in investing, the whole KiwiSaver area. So all of a sudden people are taking notice of their KiwiSaver funds. We've just run a campaign around KiwiSaver annual statements, just reminding people to look at those and to tell them that there's some new information in there. And I guess what we were hoping that new information would show, which is their retirement projection, would provide people with some reassurance that they are still heading in a good long-term direction if they're able to keep saving. But, you know, we were also quite careful in the messaging there because we were mindful that not everyone can afford to increase contributions at the moment and may in fact be looking at things like savings suspensions in the short term. So we had to play that one quite carefully. But yeah, I guess what we're seeing at the moment is people are sort of taking a bit of a wait and see. They are doing what they're doing, but they're being a bit more thoughtful about it, would be how I would interpret what we're seeing from our data.
And Gillian, how did the campaign land? It seemed to go off really well from where we were sitting, and it got a fair bit of visibility, and obviously giving people a lens on the size of the prize in the long term. How did it land from your perspective?
Yeah, look, we haven't done our full evaluation yet, but we've been really pleased with the engagement with the materials that we've put out. We wanted to have quite a content-led approach, so we wanted to have lots of conversations, and we were able to get quite a lot of media coverage and on various aspects of the topic. And people liked things like little videos just showing what the amounts were, and we know it engendered quite a lot of conversation. We saw quite a lot of social chatter on it. And yeah, just anecdotally, I've had many friends and colleagues tell me that they've finally increased their KiwiSaver contribution or made a fund choice. So those are exactly the outcomes we were hoping for from projections. So we were thrilled to hear about that.
Yeah, because Angus, not so much a code conversation, but this broader point Gillian raises around, it feels like one of the opportunities out of COVID has been a greater national conversation about money. Because the stress has come on the system, but it seems like there's a lot of collective effort going on to help New Zealanders kind of navigate their way through making the right calls or getting a handle on where they're at. Not so much a code question, but what's your sense of that?
Well, and that in itself is a subset of the whole conduct debate that has been going on for the last 2 or so years. It's you know, how do you put the customer at the center, and how do you react in a way that's appropriate for the customer at the time? I mean, when writing the code, we were conscious of this, and you know, if you look again at that first code standard, we talk about what is fair. In other words, when you're treating customers fairly, what is fair for the customer depends on the particular circumstances. And COVID, although of course we didn't know it at the time we were writing, is a perfect example of a massive change in circumstances that affects virtually all customers and consumers. And it's about taking, you know, from a financial services point of view, it's about taking a step back and saying as an advisor, okay, well, given these renewed circumstances, you know, how can we structure our response differently? Now, the code and obviously the whole FSLA regime only comes into force next March. So in terms of those formal obligations, they're not there yet. But this conduct conversation, the how do you make that consumer-centric approach to conduct work, is with us. It might not be specifically legislated, but it's very much something that governs all of our activity.
Susan, do you reckon that the debate has shifted over the last 6 months around how New Zealanders think about their financial lives, making right decisions, or does it more feel like people who have been caught short, and now they're kind of scrambling a little back to that? It's a community with haves and then people kind of really struggling through.
Yeah, probably the latter, I think, Richard, but bear in mind that's, the type of, I guess, generated by the types of complaints that we see. But I do agree with Gillian. I think that this is a time, and particularly during lockdown, when Kiwis had the chance to sit down and think perhaps more about their finances and realise that they do need to be better prepared in the future if we have a similar situation arise again. So I think it's a huge opportunity really for industry and advisors to sit down and start having conversations with their clients about planning for the future and how they can assist in that planning and making sure that they've got a financial plan, that they've got appropriate insurance cover in place. So I think that will certainly flow out of this. I think it's a little bit early yet for us as a dispute resolution scheme to be, gathering together those lessons learned, but it's certainly something that we will be doing once we've got through these complaints and had a chance to really sit and do a bit of a deep dive analysis into what's been the cause of them.
Yeah, that's a really interesting conversation, isn't it? What have we learned? I think you're right. It feels a bit early to be leaping to the learnings because we're still in the middle of the pandemic. Matt, I noticed you were about to jump on. Anything you wanted to add either on this kind of money resilience conversation?
Yeah, I was just going to say, I think we are really only at the beginning of the economic consequences of the lockdown and the pandemic, where I think, I'm not sure if it was Susan or Gillian mentioned that when the wage subsidy ends, there's likely to be some more hardship. We think that people who are struggling financially are more likely to have sort of issues with mental health, with anxiety. Effectively, we think there's going to be an increase in claims over the medium to long term that will play out for a number of years as a result of it. And if people don't have a job to go back to, it's very hard to rehab people back to a role. The incentive isn't necessarily there to get back to work. So we do think that there will be some consequences of it, and that it's going to take probably years for it to play out and for things to normalize back to whatever normal turns out to be in the future.
Matt, is that something that you're already seeing within OnePath Cigna around claims or potential claims coming in, or is this you just kind of foreshadowing the way in which you folks may look at prospective claims, particularly around mental health and so on?
We do think that we've seen a very slight uptick in claims, but as yet there's been very little claims impact as a result of, directly or indirectly as a result of COVID. We think that is still to come in the future. What we're doing now is prepping for what we think is to come. So we do think that the claims that we do eventually get, they're likely to have longer duration. It's likely to be harder to rehab people back to work. We may find that GPs are more likely to sign people off for the longer term. And that, there are likely to be consequences of it. So we are taking a cautious view on that and just trying to be ready for it when it does eventually occur. And fingers crossed that it won't, but it's better to be prepared for it.
Yeah, it is interesting. Angus, I'm going to go to you just grab hold of that idea of Matt's and also Susan's idea around, you know, maybe the opportunity here is to help more New Zealanders kind of get financially set, financially literate, financially planned. What's your read, having had a lifetime of experience in the sector?
Well, I think it comes from two directions. It's not just about sort of observing what customers are doing and perhaps what they could be doing differently in terms of their own financial capabilities, financial literacy, financial response, but it's also seeing how, you know, from the other side of the fence, advisors, institutions, industry can sort of come to the party and make it easier for consumers to do the right thing. And I think there's scope for hugely inventive thinking now, because we're entering a period not just of a few months, but of several years where things are going to be markedly different. And there are going to be a lot of people taking a lot of strain. And, you know, I think this is industry's opportunity to stand up and say, okay, whether it's because what's written in the code in terms of treating clients fairly, or whether it's because it's in some conduct legislation yet to come, or whether it's just because it's the right thing to do, we need, as a financial services sector, to step up so that we are there for customers. And I don't think that that's a pre-written script. I think it requires some really detailed, considerate thinking. Thinking about different approaches. And you've got this whole bundle of stuff around COVID, and we know that it's going to be followed by at least one big thing, and that's all the climate stuff. Which is, equally disruptive, and there are probably things that we don't know about. I think that's in the spirit of putting customers at the center of the way you engage.
So what's the message if you're a professional on the end of this webinar listening, and you're working in a large organization or you run a financial advisory practice? Angus, from your perspective, what seems to be the kind of call to actions in that regard?
Well, I'm going to steal another word from the code. I'm sorry to be a bit obsessed by the code, and that is just to listen. To listen to your clients. Listen to what their roadblock is or roadblocks are, and try to respond to that in an inventive way.
Folks, we're at 4:10. We've got about 5 minutes to go. Feel free to send any of your questions through. Gillian, I'm going to go to you. You kind of opened the door to the conversation about some of the work that the FMA have been doing with counterparties or with other regulators in other jurisdictions. What have been some of the insights as you've spoken to regulators in other parts of the world in terms of how they've responded to manage investor confidence and capability through COVID, but obviously before and post?
Yeah, so some of the things that have come through have been, most jurisdictions have responded in very similar ways to New Zealand in terms of government support, encouraging, mortgage holidays, encouraging insurance premium relief. All those kinds of responses were common. In terms of, capability sort of response, what has come through has been the importance of the one-on-one help. So when you're in a stressful, strange situation, telling someone to go and read a book or something is just too hard. So really the regulatory bodies around the world have been emphasising the support of one-on-one advice, and that includes budget advice as well. So really upping that. And in New Zealand, we've seen some enhanced funding for FinCap. I think Tim probably would have mentioned that in your previous session, and that really reflects the additional services that are needed in this sort of an environment. And then I guess after that, all of the jurisdictions now are turning their minds to what happens next. How can we start preparing? And that is a mix, as Angus says, of what consumers can do themselves, but also what providers can step up and do and help with. So we're all at a similar sort of place. I mean, at the last call, my colleague did the night shift actually and sat in on one of the sessions overseas. They were fascinated, obviously, that we have come through. But yeah, they're certainly seeing unintended consequences of some of the policies they've put in place in some places. For example, identity fraud in Australia. I think some of these topics have been discussed previously on these sessions. So there are things that can go wrong when you're trying to do the right thing, but otherwise people are in a very similar stage. They're sort of going, how can we prepare, how can we be ready for whatever the next wave brings, and how can we start thinking towards the future, and perhaps a conversation for consumers particularly is how can they start preparing for the longer term. So that will come into a review that's happening this year of the National Financial Capability Strategy, of which the Investor Capability Strategy is part of.
Yeah, thanks, Gillian. Matt, any final comments from you?
I would just go back to Angus's point. It's a really good opportunity for insurers to step up and support New Zealanders and help build trust and confidence in the industry. The other thing that happens at times of sort of fear and insecurity is that Kiwis do tend to get interested in protecting themselves, and so there's a good sort of opportunity for insurers to increase the level of protection that New Zealanders have at this time as well. So as well as supporting New Zealanders at claim time, there's a good opportunity to increase the level of insurance that consumers in New Zealand have. So we should look to respond to both of those angles as well as we can.
Thanks, Matt. And Susan, last word for you. Any final thoughts?
Yes, I'm just touching on what Angus said before as well. I think this is a time for advisors to really show their value by being there for their clients, even if it's just calling in, checking in with the clients to see how they're going, what their needs are, and to listen to them. Sometimes people just want to talk and get something off their chests and show empathy. It's something that we teach our staff here to do. And I think that, I realise many advisors will be doing it tough as well at the moment, and that's all time out of their busy days. But I really do believe it pays off in the long run, because you'll get a client that will become a loyal client for you. And all the research shows that if you get somebody that you do a good job for, that they come to see you as a trusted advisor, that they will spread the word to friends, colleagues, family, and you'll pick up other business through doing that right thing.
And so let's close this. Thank you for a number of comments that are coming through. I'm not going to get people to answer it, but just to point to the fact, as Susan just pointed out, number one, all of us in the sector are facing COVID as our clients and our communities are. Some of us are doing it really tough. Some of us are doing it not as tough, but it is really difficult from all sorts of ways. In the advice community, clearly there are people who are having to work with clients to reduce cover, change cover. It's not a time of plenty, it's more the reverse, and managing your cash flow and saving clients is obviously really front and center right now. Obviously a couple of comments around some activity in the DI space, but I think counselling clients, working with them to stay intact and to understand the value of the plan that they've got is really important. I think to Angus's point, really important around this is a time when New Zealand needs us the most. This is a time when culture and conduct absolutely will shine through. And to Gillian and to Matt's final points, there's a little bit of contradictory data out there. On one hand, people are feeling confident around investments and so forth. On the other hand, the data is pretty extreme, saying people don't have more than a month to 3 months of savings should the worst happen. And so I do think we're in for a tough time, which means the community is going to need us even more. So on that note, on the topic of codes, customers, complaints, COVID, and claims, a huge big thank you to our panelists. To you in the audience listening, really appreciate you taking the time. This session will be up online in a day or so. If you missed it or you wanted to share it with anyone, but wanted to particularly thank the panel for sharing their insight and their expertise with us. Folks, have a great afternoon, and thanks for watching FSC Connect. Cheers for now.